I'm Rob Booker, and this is the weekly webinar for fxstreet.com. Thanks for being here. Good to join with you. I run robbooker.com as well as piptopia.com, which is a website for live training students that we've worked with all around the world, and it's a Facebook-style social networking site for traders and other people who've been to training in the past, and also work together with Bradley, who is the CEO of Rob Booker Japan. You can go to robbooker.co.jp to check out the Rob Booker Japan website. If you speak Japanese, there's probably no better place to go for Forex related than the website that Bradley set up. It is absolutely stunning. Today, for about 30 minutes, we're going to work together on support and resistance. It's the primary method of trading that I've used over the years, although I've done a lot of other statistical analysis and built indicators and whatnot. A lot of what I do comes right back to support and resistance, and I have a firm belief that if you know something about support and resistance and you practice it, you've got something you can depend on for a long, long time. Okay, so we're looking at the pound-yen 5-minute chart, and there's a couple things that I'm looking at this morning. If the currency pair falls in the short term, I think it's likely to fall down to this 5-minute trend line that we'll color green. I color all of the trend lines that I use for profit targets. I color those trend lines green and call them baselines. Then, if it moves upwards, I think we have a really good chance of seeing the currency pair retest this level right here. And it's not an easy level to draw. However, this is about the best level I can make it. And I want to set myself up for a short-term move that goes to the upside and a short-term move that goes to the downside. In either instance, I want to have a profit target, and the pound-yen is one of those currency pairs with a wider than average spread. However, it moves so much that it provides opportunity that you can take advantage of on short-term charts. So let's say that the pound-yen does move up. All right. How could we possibly take advantage of that move? I'm going to take a look at two different types of situations. Number one, if it moves above 150.31, in my opinion, what that creates for us is an opportunity to go long, even 1 point above 150.31, a break of a horizontal level of resistance, move up to 150.43, and then maybe very shortly thereafter, move a stop loss to break even and trade upwards past this green baseline. However, in the instance like we're looking at right now, where it moves down instead of up, we have an opportunity perhaps to trade this currency pair short. And I'm just drawing a blue trend line, which I use as an entry line. And it looks like this blue trend line has already been broken, and the currency pair has already started to move downwards and stopped cold at about 150, the 150 mark, that round number that the yen-Japanese pairs do sometimes have trouble penetrating. If we can get back down below the lowest low that the currency pair went when we saw it break below 150 just now, or if we can rise above 150.31, then in my opinion, we have a traditional, plain old, simple support and resistance style trade setting up for us. If it falls below 149.98 and goes just to 149.97 or 149.96, that's a sell trade for me with a profit target of 149.56. You'll see that that's about or approximately where the green baseline that we drew terminates. On the other hand, if it rises upward and it breaks above 150.31 to 150.32, 33, 34, that's a buy trade. The buy trade's a little bit more difficult because there's not as much room there for a profit target on the buy trade. So I want to look at a few different things that we could consider. On a buy trade, we could not only go to the green baseline that I drew, but we could go up to this recent area of resistance that has been hit twice just within the last, I'd say 12 hours. I mean, really, really recently. Last night, Eastern time and Pacific U.S. time, it hit this 150.60 level and got close to it multiple times. So that would be a completely reasonable profit target on a buy trade. A buy at 150.32, 33, and a profit target all the way up at about 150.60. If there are any questions about that setup, let me know. Doesn't look like there's any chart for some people. But then for others, the chart seems like it shows up perfectly fine. So we'll stick with that. It looks like there's neither a bias right now for the sell side or the buy side, in which case it's good that we have a plan to go in either direction. This is the pound yen 30-minute chart, and I'm not quite sure that you can see it. So what I'm going to do is stop sharing the chart, then I'm going to come back and reshare the chart all over again, and then I'm going to type in this box, British pound, Japanese yen. We're on the 30-minute chart, and you can see that there are longer-term levels of support and resistance that can be drawn on the 30-minute chart. For instance, if we break and close above this blue entry line on the 30-minute chart, it's quite similar actually to the trade we're thinking about taking on the short-term 5-minute chart. However, because we're looking at a longer-term setup, there are a variety of different support and resistance levels for profit targets that we have to choose from that are not simply based on a very short time frame chart. For instance, we'll go to the 60-minute chart now and draw ourselves a level of resistance, call it a baseline. A baseline is a longer-term trend line that we use as the profit target. So if it breaks above one trend line, we trade to a second trend line. I've talked about this at FX Street for just a bazillion years now, and it's the same thing over and over again. It's the same thing that's on the DVD series and whatnot. A break of one trend line can lead to a move in a currency pair to a subsequent trend line. And that's what we're looking at on the pound yen right now. If it closes above the blue trend line that we drew on the 30-minute chart, it could make a fairly nice move up to the green baseline that we drew on the 1-hour chart. Let's go back to our 1-minute pound yen chart, and as you can see, nothing's open. While we were looking at the longer time frame chart, nothing really happened. We'll go back to that longer time frame chart and hope that we don't lose it. Straighten out my chart a little bit so we can see it a little bit better. And now we'll look at the euro dollar. Many of you trade the euro dollar, so we'll take a look at that. This is the euro dollar 60-minute chart. I'm going to go back to the 1-minute pound yen just in case something opens. Okay, on the euro dollar, I'm going to erase these levels. And I want to draw just a couple things. This is the 60-minute chart, and we can draw a few levels on the 60-minute chart. Something across the tops here. If the currency pair rises, I would not be surprised to see this currency pair rise up and hit 1.43 even if it does rise. However, if it falls, which I think the currency pair is going to do, that's my bias. Shouldn't have one, but I do. If it falls, we've been looking together, people that I trade together with, we've been looking at it falling to a number of different levels. Wow, where did we have that level? Maybe it was on the daily chart. There we go. So there's a trend line here on the daily chart that we're looking at. And we've also been looking at this trend line. Both of them could be levels where the currency pair is headed to if it falls. I color these green and keep just one and explain why I've kept it. So there we have a green baseline. I'm going to delete this baseline right here. I'm going to delete it because it goes further back in time, and I'd like to choose a green baseline that is drawn with more recent support and resistance in mind. So that's what I did. And as you can see, if the currency pair falls, we've got a green baseline that terminates on the end of the chart here at 1.4097. And how do we get there? What do we do? What kind of methodology could we use to trade down to that level? We'll go to the 60-minute chart and talk about that for a minute. I'd say if we fall even 1 point below 1.4178, that's the red horizontal level of support. If we go 1 pip below that level, that could be a sell trade. Stop loss would go above the recent highs, above 42.50, and a profit target at least 1.4100. That's the euro dollar, and it's a sell trade setup. Let's go to the 1 minute. You can see that on the 1 minute pound yen, we did see the trade open. You could get in at approximately 150.28 now. I'm not telling you to get in. I'm just telling you you could get in there if that's part of the system that you want to follow. And the buy trade came at 150.32, but now it's below that level. We talked about riding that trade all the way up to 150.57 and reminding ourselves that at 150.40, this green baseline on the chart, we might want to move the stop to break even and just be slightly cautious. If you took this trade together with us, let us know by chatting with us now on the HotCom feature. Just type in and let us know that you're in this trade, and maybe let us know where you got in on this trade if it was something that you did take. So nobody took it, which is fine. You don't have to take any of those trades. 150.35 was a price that somebody got in at. 150.22, says Linda. So there's a couple people here that got in on this. We want to be watching that as we go. We don't want to be ultra patient with this currency pair. You don't have to ride this out or last this out for a great deal of time. You can put a stop loss down at 149.95 or 97 if the short trade opens. You don't have to stay in this for a great deal of time. A 30 pip stop would be completely reasonable. And the currency pair is just bouncing around pretty violently right now on a super short-term chart. Obviously, the euro dollar, this short-term setup that we looked at, it's not going to go anywhere right now. It's a longer-term setup. It's not short-term like the pound yen. I'm going to remove all the tools on the euro dollar, and I'm going to pull up the euro dollar 1 minute chart. Boyke, sure, those are scalp trades, sure. Whatever you want to call them. Scalping, trading short term, whatever you'd like to call them. And serve the following purpose. When trading every day a regular type of system that you've back tested and that works from a longer time frame chart, the 1 hour or 15 minute or something like that, what I've noticed is that people that practice short-term trading, even for a little while in the morning, become much more adept at obeying stop loss levels and sticking to their plan and understanding exactly where they're going and why they're in the trade and how long to stay in if something goes wrong. People who trade in the short term in the morning, even for 30 minutes or 10 minutes even, end up with a pretty good understanding of what goes wrong. Pound yen 1 minute chart, just checking back in with it now, isn't really going anywhere. Losing a little bit of patience with that, but we could stay in a little bit longer. But remember, we don't want to be in longer and below 150. We don't want to be in that trade there. If you want to get out even earlier than that and save money, you can always get right back in on that trade. On the 5 minute euro dollar, if the currency pair rises, we could rise up and retest this blue trend line, which I'm now going to color green. But other than that, there does not seem to be much of a trade here on the euro dollar. Yeah, it doesn't seem to be much going on the short-term euro dollar. Why don't we look at the US dollar, Canadian dollar? Okay, that might look a little bit better. 8 pips in and out, says Linda. That's excellent. Looks like the pound yen is just still sticking around. Not much else going on. I want to make sure we check back there and look in on it. Here is the dollar Canadian 1 minute chart. Here's the dollar Canadian 5 minute chart. I'll type in US dollar, Canadian dollar, so you can see what we're looking at. If the US dollar, Canadian dollar falls, seems abundantly likely that fall to a level like this on the 5-minute chart. This is something short term. That's a good short-term entry line. And here might be a suitable profit target baseline. That's not much of a trade in there. Take a look at it after I finish drawing the line and have some discussion about that. The lines are really close together, so this is not an optimal type of trade. What we've done here is we've drawn a short-term blue trend line, which we call an entry line, and a longer-term green trend line, which we call a baseline as a profit target. And not much to it, not even worth taking that trade. So I'm going to remove these lines from the chart and simply move onwards to a different currency pair. New Zealand dollar, US dollar. All right, this one's looking pretty good. Arcox says, do you know a good place to get free S&P and oil charts? No, sorry, I don't know a good free place for that. What about on the upside, asks AB? I don't know, AB. I don't have a lot to say about the upside on that pair. Hi, Amy. How are you? The dog just came in, so I'm going to say hello to Amy. No, I'm not in Utah. I'm in Southern California. Okay, so this is the US dollar Japanese yen, and when we left off and froze up, I had drawn a short-term trend line on the US dollar Japanese yen and said if it falls and closes below that level, we might see the currency pair fall to the 92.30 mark. I'm going to go back to the pound yen. So once again, we're out of that trade. I think we talked about getting out of that trade. The lowest you'd want that to go and still be in the buy trade is about 150 or 149.97. But getting out early was not a mistake. And if it falls and closes below, falls below 149.98, so if it gets to 149.97 or 149.96, which it looks like it's doing right now, that's an opportunity to go in the opposite direction and sell the currency pair rather than buy it. It looks like we might get a chance to see that. Yeah, I can go back to the Kiwi dollar later. Nothing was really interesting about it. It actually didn't turn out to be a trade that made any sense to take. So we can actually go to something else, like watching the pound yen right now. The pound yen did fall below 149.98, so now we have an opportunity to sell the currency pair. Stop loss could go above 150.31. However, that's the maximum stop loss, not the minimum. And it's right at 150. And if you have any reservations about trading a currency pair right at the round number, then you don't want to trade this. You might want to wait for it to go even further than 149.97. And I'm not here to tell you what to trade. I'm certainly not here to tell you that one trade is better than another or that you need to take one trade over another. We lost 5 to 10 pips earlier on the pound yen, maybe plus a little bit of a spread. And now that it could fall below 149.98 again, there may be a chance to get some of those pips back and then, at least close out the session of short-term trading with something positive. The reason I short-term trade, to remind you, is just to get going every day. There's not a lot of money involved, not a lot of huge commitments involved here, and not doing it in order to prove anything. Just get in the market, get out of the market, and move on to my longer time frame trading. We have time to look at another currency pair, and then I'm gonna need to go. So why don't we take requests for what currency pair you would like to trade? Our Arcox, the red dotted lines are just support and resistance horizontal lines that I've drawn. And I'm not waiting for a close, AB, on that short-term chart. So no requests for currency pairs. Australian dollar, US dollar. Thanks, Rob. Happy to look at that one. Looks like the dollar yen is falling nicely below the trend line that we drew. Looks like the Australian dollar is falling as well. Looks like the pound yen is falling as well. So entry at 149.97. Currently at 149.82, 83. Don't know who took this trade with us, but if you did take this trade, please let us know that you took the trade, just so we can be aware of it and talk about it together. Already looked at the euro dollar, so we're not going to look at that one again. But we'll go back to our Australian dollar, US dollar chart in just a moment here. All right, here's the Australian dollar, US dollar. We'll look at something medium term-ish, 30-minute chart. The 30-minute chart on the Australian dollar, US dollar looks very similar to the chart that we looked at for the euro dollar. If this currency pair on the 30-minute chart can break and close below this trend line that you're looking at, it's a blue entry line, then we could see further losses in this currency pair. This is the Australian dollar, US dollar. And if it falls and closes below this entry line, we could see the currency pair fall as far as recent lows of 82.15 and 81.55. I don't have anything short-term on the Australian dollar today. I did yesterday, actually, but today I don't have anything short-term on that pair to look at. Let's look back at the pound yen. Pound yen's doing okay. If we could spend a few minutes looking at this together, that would be, I think, really nice. For those of you that are in this trade with us, we sold at 149.97 or 149.96. Profit target is the green baseline that you see at the bottom of the screen. That is a trend line that I drew using the 5-minute chart. What we've done now is we've started to get back the money that we lost on the trade where we bought a few minutes ago. You're probably up about 15 points, and there's no reason why you wouldn't take that. There's no reason why you feel ashamed about taking, 10 or 15 pips. What you want is you want your money back on the trade that lost earlier today. That's what you want. And yes, Alvin, you could take a short trade. You could set that up. If that trend line is broken, that's a sell trade. That's absolutely for certain. Yes. Joe asks, why the 800 simple moving average? Joe, I just did a massive amount of statistical analysis over the years, and that's the one that works the best for me. And there's your pound yen 1-minute chart. There's no reason why you have to stay in that trade any longer than you want to. 10, 15, or 20 pips is perfectly acceptable on a short-term trade like this, especially considering that you just lost about 10 pips on the buy trade. You could have had an opportunity to get that money back, put it in your pocket, and move on to something else. How much for the stop loss on the Australian dollar, US dollar, Alvin? Well, make sure you've done your testing and you know where you'd want your stop loss to be. But I'd put a stop loss above the recent highs of 83.30. And let me know, folks, if you have any questions before we wrap it up here. Excellent, Chris. Out of your long trade. That's good. So it doesn't look like there's any questions, and that's perfectly fine. This has been a Wednesday, September 2nd, 2009, weekly FX Street webinar. We looked at the pound yen short term and took buy trade, small loss, sell trade, small win. Looked at the euro dollar on the 30-minute and the 60-minute time frames for a trade in either direction, up or down. Looked at the Australian dollar, US dollar for a 15-minute sell trade below a trend line with a profit target of a recent low on that currency pair. We looked at the New Zealand dollar, US dollar, but didn't find much that we were interested in, and I certainly don't recommend that that turned into a trade. And then we looked at the US dollar, Japanese yen, and kind of got away from looking at that over the course of the moments where we've been together here. So if we could real quickly, we'll look back at that and see how that's doing below its trend line. And go down to the 5-minute trade, the 1-minute chart, and it fell below our trend line. It closed at 92.50, and it fell about 10 pips from there and seems to be a little bit stuck. I wouldn't give it any more time. I would be banking the money if I had any, and I would be moving on with that currency pair from there. one more small glance at the pound yen. Could have been in, could have been out, and taken some money off the table already. One of our friends here says the mortgage bankers are trying to break up Fannie Mae and Freddie Mac and get an entirely new mortgage insurance backed by the government. Seems like what I would do if I were in that business. Thanks for joining me today, everybody. Thank you, Vicki, and thank you for having me here. Thanks for joining us. For all those of you that have been here, appreciate the time that we spent together. If you're in any trades right now in that pound yen position, just remember how we've managed it. For those of you that have not already checked it out, you definitely need to check out, I think that's the link, Vicki, tradersconference.com, traders-conference.com. This is the FX Street yearly expo/conference for traders, and it is spectacular. And the people coming are excellent, and would just love to see you there. If you're making plans to be in Barcelona, I certainly am, and would love to see you there. Thanks, everybody, for a good time today. Appreciate your time that you spend with us, and we'll see you next week. Thanks, Vicki.